Crypto prices are popping off this week. About damn time, man. It felt like Bitcoin is a stable coin there for a while. And really across the board, we're seeing prices move up for now anyway. And while Bitcoin and Ethereum obviously always capture the most attention, there has been some really big altcoin news happening this week. In particular, I want to talk with you about what's happening in the Avalanche ecosystem, what's happening with Solana, Polygon, and of course we have to talk about the latest inflation data. Now let's start our conversation by talking about Avalanche, which has partnered up with Amazon Web Services, yes, AWS. This is huge news for Avalanche. Now Avalanche is one of the first blockchains to be doing this with the aim, of course, of bringing blockchain solutions for enterprises, institutions, and governments. Huge deal. This will make it easier for developers to launch and to manage nodes on the Avalanche network as well, with basically just one-click node deployments. Super awesome. The partnership will also open up Avalanche's dApp ecosystem to the world of AWS, making it basically a massive step forward for crypto adoption. Now, Ava Labs, the company behind Avalanche, also plans to add support for Avalanche's subnets, their super cool scaling solution, to the AWS marketplace. Again, making it accessible for institutions to launch custom subnets. Now, founder and CEO of Avalanche came out and said it has been a huge boon for both individual and for enterprise developers to be able to basically spin up nodes and to test out networks on the fly with AWS in whatever legal jurisdiction makes the most sense for that particular person. And we know, of course, news drives the market, so it is unsurprising to see the Avalanche token humping up big time on the back of this announcement. Next, let's talk about the comeback kid, Solana. Not dead yet, not dead yet. Solana, man, still trucking along. Anyway, hot on the heels of the Bonk token airdrop that we saw just 2 weeks ago, Solana is back again with the launch of Bonk NFTs. The hot meme coin now has hot meme coin NFTs. This is created again by the same people behind the Bonk token, cashing in some more, I suppose. 15,000 piece collection launched on Solana NFT marketplace Magic Eden. It sold out in a matter of hours, which is unsurprising considering how popular Bonk is right now. The NFTs sold for 16.25 million Bonk a piece, which sounds like a lot, but it's actually just $26 because Bonk has a ridiculous supply. Now that hasn't stopped the secondary market from hopping on board. The floor price premium 17 SOL, or around $280, so definitely good for those who minted. The project has brought in over $900,000 worth of trading fees. All the money spent on the NFT mint will be burnt, which will be around 165 million Bonk tokens to help reduce its overall supply. Meme coins, man, meme coins. They just keep coming back. You can't keep a good dog down, can you? Anyway, next let's talk about the Polygon ecosystem, because with the Solana community basically coming back, raging on despite the big beating they took when FTX collapsed, it has come to light that other blockchains were, kind of rooting for that to happen a little bit, or at least putting money on it. Polygon reportedly paid Solana-based NFT projects Utes and DeGods $3 million to migrate chains. Wow. The founder of both projects published a statement on Discord to explain the situation, coming out saying that the team was offered even more money than what they ended up getting from Polygon. But in the end, they decided to choose Polygon because it was the best network for them to actually be using. And they said the $3 million is going to be used by Utes and DeGods to expand out the team, to grow out the projects through different, business development things, from graphic design, more content creation, more events to be coordinated and all that kind of stuff. Now, despite this news, Polygon, of course, continues to just absolutely smash it, bringing new partners on board. Polygon partnered up with MasterCard to launch a Web3 musician accelerator program. Music NFTs are going to be a big thing, man. The program will help 5 up-and-coming artists create their Web3 brands. MasterCard will also be launching an NFT collection called MasterCard Music Pass for the artists not chosen for the accelerator program. This is just yet another step forward for Polygon as they look to become a blockchain and a Web3 hub for music. And I'm telling you guys, music NFT is gonna be so big. We've already seen a lot of big music NFTs. It was also only back in December too that Polygon announced a partnership with Warner Music Group. Don't forget about that. And another big bit of Polygon news is that developers at Polygon have actually proposed a network hard fork to enhance block security and to enhance performance. And who doesn't want enhanced performance, right? If the upgrade is approved by the community, of course, it will take place on January 17th and address two key things, one of which is gas fee spikes, so keeping the gas fees low consistently, and the second is chain reorganizations. Now, to reduce the gas fee spikes, the upgrade will make an amendment to the base fee change denominator. Now, this parameter will basically be changed from 8 up to 16, basically allowing the Polygon network to be able to just like smoothen out the rate at which base fee changes for a transaction can actually happen. The Polygon network will then be able to basically better manage times of high demand without seeing any fee spikes happen. The second part of the upgrade is to make the network even more secure against reorganizations. Now, Polygon is a bit prone to reorganizations when blocks may overwrite previous ones due to different nodes reaching consensus at different times. Now, this is a bit problematic. It can lead to confusion, of course, when trying to verify if a transaction has been completed or not, right? So obviously something that's not awesome and does need to be fixed. Now, to overcome this, developers will reduce the time that it takes for a block to complete its verification process. Now, this is part of a wider plan for Polygon to improve the technical capabilities of the network, basically gearing up for the launch of ZK EVM, their layer 2 scaling solution for Ethereum, and of course getting ready for the next bull when everyone wants to use Polygon again. Now, before telling you about the big inflation news and the continued pain for crypto companies, I just want to let you know about my weekly crypto investor newsletter, Wealth Mastery, absolutely jam-packed, full of alpha on altcoins, airdrops, NFTs, DeFi tutorials, market analysis, and much, much more. Join our over 50,000 weekly readers by signing up for free using the link down below in the description. Okay, now let's talk inflation. European and US stock markets rallied ahead of the US inflation announcement this week, and US inflation did come in right on the estimate with a CPI print of 6.5% year on year. Now, this is the 6th consecutive month of lower inflation, and it's the slowest increase in the annual inflation rate since October 2021. Now, factors driving this decline, this move towards lower inflation, of course, is new and used car sales, gasoline, clothing, medical care, gas, utilities, and fuel oil, all of which came down. Now, core CPI also met the expectations, moved down to 5.7%, making this the lowest level since December 2021. And month on month, it's already showing that deflation is coming with a drop of 0.1%. But that doesn't mean the Fed is slowing down interest rate hikes anytime soon. They've said they're committed to more interest rate hikes, so gotta watch out for that. And while the market prices have been pumping this week, you do have to keep in mind the bear market's still here, guys, right? It still continues, and we're seeing that. For example, we had more job layoffs in the crypto space this week. Consensus, an Ethereum software company, they said they're cutting over 100 jobs. Coinbase came out, they announced their third round of layoffs. They're gonna be cutting 20% of their workforce, which is around 950 employees. This restructuring that they're going through will take Coinbase up until the end of Q2 to complete. And it follows on from the 1,100 jobs cut in June last year and a further 60 back in November. So they just keep on cutting. CoinDesk estimates nearly 27,000 jobs have been lost across the crypto industry since April 2022, based on the different media reports and press releases that we've seen from crypto companies. But the Coinbase news isn't stopping buyers coming in for the stock. Cathie Wood bought more coin shares for ARK Invest. So ARK has been on a bit of a shopping spree during this bear market, having already loaded up big time on other tech stocks like Tesla, for example. But ARK Invest has added almost $3.3 million in Coinbase shares, making it the second big purchase in a week. And that $3.3 million came only a day after ARK bought $1.5 million in Coinbase shares. Now, that's not to mention ARK's December 14 purchase of 300,000 Coinbase shares as well. So they've been buying a lot of the coin stock, and it's pretty damn cheap these days. It's understandable why. Is there anyone actually hiring, though, in the crypto market during this bear market? Everyone just laying off employees? Well, the answer is yes, and that answer, of course, is Binance. Binance is planning to go on a 15 to 30% hiring spree in 2023 to get the company well organized for the next bull market, basically continuing their utter domination of crypto markets. Okay, that's it. Subscribe now. See you next time.